Good afternoon, everyone. Thank you so much for joining me today. My name is Chris Sachi and I'm the Sales Director at the Australian Bond Exchange. Thank you so much for giving us the chance to talk you through the heading, how to make bonds work for you and protect your investment. Good morning to those who are in Perth as well. Thank you so much for joining us. We want to spend about 20-25 minutes today just going over some of the common questions and the understanding of bonds and the things we hear from you as to what you are concerned about, what you're excited about, and effectively provide you the information you need to make the right decision for you. So as I said, I'm going to get started right now. Before I do though, I do want to point out, I want to try and make this as interactive as we can. So you can see on your menu and your taskbar, there are chats and there are question pages as well. Please get in there and ask as many questions as you can. I'm going to do my best to answer some at the end, but I have my team online as well who want to be bothered by you. So ask them as many questions as you like as we go. And of course, if there's anything we can't answer today, myself and my team will reach out to you tomorrow to answer any questions you might have. With that said, let's begin on what we want to do today. And I'm just going to move this out my way. Bear with me. There we go. You to have a good understanding of what is a bond. Number two, how they actually work. And of course, then get some practical insights into the benefits and most importantly, the security of investments in the corporate bond space. Before I talk about all things bonds, I probably should give you a good idea of us and who we are. The Australian Bond Exchange. We were formed in 2015 and we have the ability to satisfy the demand for both retail and wholesale investors to invest in a wider range of fixed income securities. So effectively what we're here to do for you is provide you with the right bonds at the right price with the right returns. Before I get into that, I'm going to ask my colleague Mike to put up the first poll that we have, just to get a bit of an understanding from all of you as to what you currently do and where you're potentially going to go with this. So we've got about 3 poll questions. We'll start with the first one. As an investor, what do you currently invest in? Click whichever option you like. If you wanted to just click the screen there, we'll give everyone about 25 seconds to put down their answers. We're not going to share your personal answers with anybody, but we wanted to get an understanding from you as to what you're up to at the moment. We'll give you another 10-15 seconds to get a few people in. We'll let it go for a little bit longer. 15 seconds. Another 5 seconds if anyone hasn't answered. And there we go. Thank you for that. So that gives us a good idea. And look, the common theme tends to be shares and property is where most people are at. And of course, the common question we get now in term deposits and bank accounts where they put their money with interest going backwards, that is also a common theme. So let us go over all of that today. So you can see from this that there are the results there. With that said, let's get straight into it. The common questions. I know I've spoken to many of you before, and I'm going to speak to many of you moving forward, but there are some questions that come up all the time, and I just wanted to answer them for all of you now. These are the 5 common ones that we get and some misconceptions that I'll go over as well. Question 1, how do you buy bonds and what's the best way to buy them? We at the Australian Bond Exchange would effectively act as your broker. So you reach out to us, we give you a good understanding of what bonds are and how they work, and then we follow a process where we will provide you with information an online application form. Once we get that verification from you, we can talk to you in detail about the specific bonds that we have and how best they're going to work for you moving forward. So speaking with us, getting an understanding of how bonds work, what bonds are, and what's going to work for you is going to be key. And we can act as your broker, and we can provide you with the best bonds at obviously the best price as well. Now, another big question, how safe are bonds compared to the share market? The clear message I want to share with you is that in the share market, you've obviously got the volatility of the market. So it goes up and down. Whereas with the bonds that we're dealing with, we're talking about fixed income securities. So therefore, you know how long you're investing for, what your coupon or your return payment is going to be every year, the length of the bond, and most importantly, what is going to hit your bank account every quarter or every 6 months for the life of the bond. So from a safety point of view, you don't need to be concerned with the market. Everything's fixed, and that is what makes your investment safer and a lot easier to manage. Another big one, question 3, term deposits, bank rates, they are low. So everyone wants a safe option with, of course, a higher return than the 0.1 and the 0.2 that you're getting at the moment. The bond space is a very good solution for you. You are getting the safety of the bonds that we're dealing with. So to give you an idea, there are 3,000 corporate bonds Australia-wide. We have an intense credit risk analysis done on these bonds, and we put those that meet that criteria, we put those bonds in front of you. So we've got access to all of them, but there's probably 5 that meet our credit criteria, and they're the 5 we put forward to you. And they're the ones that are going to provide you with the returns of about 4 to 5%, whilst also a lot of them are companies that are ASX listed. So you've got that behind you as well, knowing that these companies have been set up and are doing extremely well. Some of them are worth upwards of $400 or $500 million to add that security to your investment. Usually the question that comes to me, the moment I talk to one of you on the phone, the first question is around government bonds and the government guarantee and the backing of the government. So just to give you an idea of that, government bonds give you a similar return to what you're getting now with your term deposits in your bank accounts, around that 0.5% return. So that is why most people end up staying away from that, because your term deposits are going to do a very similar thing for you, which is why you move towards the corporate bond space, because our job is to look into these companies, analyze their structure, their financials, and give you a clear picture of why we think they're going to be the right investment for you. So always looking at it if you look at it from a return point of view, 4 to 5% return per year, as opposed to maybe a 0.5% return. The last question, what is the length of the bonds? And if I need to access the money any earlier, can it be sold? So usually our bonds are about 3 to 5 years in length, but the most important thing is they are liquid, which means you can get access to your funds before the bond matures. That is quite different to a term deposit. So that is why it's a great benefit to have bonds. So if you invest, let's say, $200,000 for 4 years, and in 2 years' time, you need to access either $100,000 or $200,000 back, we can sell it for you within 3 to 4 days and get you that money. So it gives you that liquidity that you need to just give you peace of mind. If anything was to happen, touch wood, it didn't, you could always access that at any time. Now, a couple of misconceptions which are key. If the market goes down or lockdowns are reintroduced, what happens to the rates of our returns? What we call them are fixed income securities. So that is why it is different to shares where the market doesn't play a part. Your returns are fixed, the length of your bonds are fixed as well. So as the rates go up and down, it doesn't actually affect you. Your returns are going to stay the same throughout the life of the bond. The only time the market could play a part is if you chose to sell before the maturity date, and that is when we look at the market value of the bond before we sell them. Obviously, our goal is to ensure none of you lose any money, and that has been our goal from day one, and we've managed to achieve that to date. So we will do everything we can to ensure that stays that way. I'm unable to access my money until the bond matures. Again, that links back to one of the question number 5. You absolutely can access your money before the bond matures. Obviously, we advise you that the best thing to do is let your bond sit the whole way through that 3 to 5 year period, collect your income, and then at the end of the period, either choose to reinvest, or you can take your money and invest in any other area you choose. Only government bonds are safe with a government guarantee. That isn't the case. We've got, again, repeating what I said earlier, our role is to ensure the safety of your investment. So we spend a lot of time and resources to analyze the depths of the company and the details of the companies we put in front of you. So from a security standpoint, we ensure that we are comfortable with what we have seen, what we have checked, and out of all those bonds out there, there are 4 or 5 that we are very comfortable with and feel they are a safe option for you. Hope that clears that up. Before we I'll do this example here, and then I'll put up another poll question. Just bear with me a second. Let me go back one. There we go. I just want to give you a basic breakdown of what a bond is and how it works. It's a common question that everyone wants to know, and usually at the back end of the process, when we send you a buy contract, it's the first time you get to see how it works. I just wanted to break it down really quickly and easily for you. We're going to use an example of investing $100,000 in a 4-year bond with a return of 5% per year, which is your yield to maturity. The assumption we're going to make is the bond costs $100, which is par value. So you want to invest $100,000, it's going to cost you $100,000. We have our brokerage fee, which works out to be about 0.5%. What you have to understand is each bond gets a coupon payment every quarter or every 6 months. If you are buying the bond, say now in March, and it is a 6 monthly coupon payment, you effectively have not held the bond for nearly half of the payment period. So usually up front, you pay back the interest component, which you haven't owned the bond for. But then when you get your payment in June, so at the 6 monthly mark, you're going to get paid the full coupon, which means you get the offset for that initial payment you have made, because you're going to get paid the full fixed coupon as if you were the holder the whole period of time. So that is usually the only question we get initially, is what is the interest component and why are we making a payment? That is just to ensure that when you haven't held the bond for the full period, that is the payment that gets taken up initially. And then when you get your coupon payment, it is paid in full, so that amount gets offset. Again, if you have any questions on that, I can speak to you directly. Feel free to ask any questions as we go. Mike, do you mind putting up poll question number 2, please? And let's give everyone a chance to answer that as well, just to do with investment now that we're on this slide. That should pop up. There we go. If we had a safe bond investment for you, how much would you be open to investing? Obviously, we need to discuss the details and get an understanding from you of what you're after and what you're trying to achieve. But keep in mind, it is a $10,000 minimum. We can actually get you very comfortable with the process. I'll give everyone about 20 or 30 seconds to put through their thoughts on it. 20 seconds to go. Just an idea of what you think would potentially work for you. Obviously, we'll discuss all those details with you when we speak to you directly. Another 10 seconds. 5. There we go. Excellent. I will end that for you now. Share results. So look, it's quite a mix. There's a fair few people with different ideas and thoughts, and that's great. And that's, when we talk to you directly, we'll explain to you what each one would mean for you and really get an understanding of what you're trying to achieve out of your investment. Let me close that. There we go. So let's move on to the next one. And that is breaking down retail investor versus wholesale investor. So to make it nice and clear for you, each and every one of you on this webinar and each and every one of you who's going to watch this later is a retail investor. With a minimum investment of $10,000, you can get into the bond market. We can get you returns between 4 to 5% fixed every year for a 3 to 5 year period. That's each and every one of you. That's myself, and that's everyone out there. Now, there is an additional category for a small group of you who fall into that category called a wholesale investor. What that means is you would have to fall into one of two categories, which would need to be verified by an accountant. So you would either need to have a gross income of at least $250,000 per year for the last 2 years, or combined net assets of $2.5 million or more. If you do fall into that category, you get access to a couple of wholesale bonds, one of which we have helped structure with a company called Palace Capital, which could get you a 7.5% return per year for 4 years. But again, for that to happen, an accountant would need to verify that you fall into either A or B of that situation. Hope that makes sense. Again, we can clarify and discuss any of this with you when we call you directly. A bit of an understanding of the fees involved in bonds and the simple question at the top, why pay more? So with ABX, we have a one-off fee. There's no ongoing, there's no management cost, there's nothing like that. It is a one-off transaction fee with no other hidden fees at all. So to give you a breakdown, just on the right there, you can see a little table. So anyone investing over $100,000, the fee is only 0.5%, and that's it. So it gives you a bit of an idea, and if you have a look at the table on the left, that is where significant amounts of money is saved based on that fee structure alone. So any of you who's worked with financial planners or worked in other spaces, you know there tends to be annual fees, ongoing fees, and so forth. None of that here. So straight off the bat, you're saving thousands of dollars by the end of your bond and by the end of the maturity. So why not have the higher returns coming in your back pocket and just having a one-off fee, which is what we focus on. The only time you would have another fee is like what I mentioned before. If you sell the bond before its maturity, then we charge that brokerage fee again. But otherwise, there is no other fees involved. Just a quick summary today. Before I answer some questions that have come in, and there's been a fair few coming in today, before I get into the questions, I just wanted to give you a bit of a breakdown and a summary of what we've gone over. Now, bonds, utilizing them for a well-diversified portfolio is key. This will increase your security and also help you with your predictability. Having an idea of what's coming in, when it's coming in, and how much is coming in will make things so much more easier for you, where you don't need to be concerned about the markets and the volatility and so forth. Many people prefer the predictable income. That is what bonds will give you, particularly those who are retired or close to retirement and you're trying to get yourself a small income. Bonds is a key, and a lot of our clients who are on this webinar today as well would know that, having that fixed security just makes planning for your future a lot easier. Corporate bonds can provide you a higher return. They provide you higher returns in term deposits, but without the risks of the share and property market. So effectively, why not lock in returns of 4 to 5% over a fixed period and simply start with as little as $10,000? Might you mind kindly putting up the third and final poll before we get into some questions that I can answer for them? I'll give you all some time to answer that. Quite an easy one. How long would you like your investment to be? Our sweet spot, as I said, tends to be that 3 to 5 years. With that said, we've got access to every bond and every possibility on the OTC market. So we would obviously love to know what's going to work for you. I've spoken to clients who have looked at 1 year options. I'm speaking to clients who are looking at 1 year, 1 to 2 years. And of course, we're dealing with, 3 to 5 and many more. So I'll give you another 10, 15 seconds to jump in on that. 10 seconds. Thank you so much. Let me close that off. There we go. And I'll just share these just to give you a bit of an idea. So you're right. So, 3 to 5 years is fairly common. So it gives you the ability to plan for what's happening in the near future. And of course, there's a bit of a mix there too between more than 5 years and under 2 years. So we can cater to all of that, and we'll do so when we speak to you directly. Let me just open up my final page here. A few questions that have come in. What is the process of buying bonds if we choose to move forward? Good question. Now, on this page here, there's a website link there. You can't click on it as such, but what we're going to do for you is after this webinar, we're going to send you an email with a link to the online verification form. What that does is it will verify who you are. Once we've verified who you are, we can actually talk to you about these specific bonds that are going to meet your particular needs. Now, on that form, we do ask questions like bank account details and so forth, just to give you a bit of comfortability. Those kind of questions don't need to be answered. You can leave them blank. The only reason why we ask for bank account details is if you're moving forward, that is the bank account that your coupon payments are going to get paid into. So that'll be the form we send out, the link to the form. So we will send that out to you. Once you've filled out the form, we discuss the options. Once you're happy, we go and source the product. When we get it, we will send you out the buy contract, and that's when we can set up a direct debit to make settlement, which will be 2 days after you receive the contract. Another question that's come in, what happens to the coupon payments if there are any issues with the market, and if there were to be any lockdowns moving forward? Good question. As I covered earlier, they are fixed income securities. So your coupons and your payments are locked in. Your interest components are locked in. So you're going to know exactly what you're getting, when you're getting it, and how much you're going to get. The markets won't play a part. COVID won't play a part. It will all be fixed for you. Another question that's come through, which I'll answer for you, how many bonds should we invest in to ensure security? It's a good question. The reality is we need to, when we chat to you, we want to work out what your portfolio is going to look like. So is it going to be 50,000, 100,000, 500,000? We need to determine that. So depending on the size of your portfolio, we might simply go with one. We might split it up between 2 or 3, but in the end, it will just come down to your investment amount. If you're just starting off, it is quite easy just to utilize one bond to get you comfortable with the process. And then as your portfolio starts to get bigger, we can then cater to spreading your portfolio out a little bit. That is pretty much all from me today. How did we go with time? 25 minutes. Pretty happy with that. Thank you all so much for joining us. Now, on the page you've got there, please note down, you've got my direct phone number, you've got my direct email address. We will reach out to each and every one of you after this webinar, but if you have any questions, call me directly, send me an email, and we can chat about your personal situation, understand what you're after, and we can go from there. Thank you so much today for joining me. We're looking forward to doing more of these webinars to give you a bigger picture of the bond market. As I said, contact us at any time, and we look forward to chatting to you soon. Thanks a lot.